Okay, before the new tax law came into existence in January 2026, many small businesses owners keep filing annual CIT return, not because they don't want to comply, but because they may not be able to afford the audit tax or the professional fee. But that is no longer the case now. The new tax law now allow eligible small company to submit statement of accounts with owners' attestations, which has eliminated the need for audited financial statements. Yet, many business owners still get stuck, not because REV360 is difficult to use, but because they don't know one simple trick that professional accountants use. The big mistake, opening statement of account template and typing figure directly into it. Don't do that. Professional accountant prepare everything in Microsoft Excel first. Welcome back to this channel. I am going to show you the exact workflow accountant use before submitting anything on REV360. No theory, no complicating accounting. Just a practical system that anyone with basic Excel knowledge can follow. Okay, we are here on the templates. All right, so remember that this video is all about casting figures on the Excel. We cast the figure on the Excel first. Then once we are okay, the figure balances, then we can now transfer it to Microsoft template of the statement of our account, where we can now convert it to PDF before we now submit on the REV360. So you just need to follow me and take it step by step, because this one we are casting figure, right? First of all, on the income, profit and profit or loss account, there is NE. All of them is NE. You can see it now. Let's check it down. NE, cash flow, NE, everything, even the statement of accounts, which is balance sheet, statement of financial position, which is balance sheet, all of them NE. So even to the notes to the account, NE, right? Now, the first thing you need to do is to look at the shares of the company. So you go to the notes of the account. Where you have the green color, that's where you type. You type, if it's 1 million for the shares, go and check the CAC document, you type it. So once you type it here, you see, go to the balance sheet. You see it, balance sheet and the balances with the 0 naira here, means that the account balance, all right? The thing, once you click, type 1 million, it will populate. You can see the bank now have 1 million. Shares now have 1 million, right? The account balances. Now, if you are satisfied, the next thing you need to do, okay, before we get to the next thing, at this stage where you have ordinary share, you can end your transaction here when you are filing NE, right? When you are filing NE, when there's no any other transaction, so but you must file post the share value, because you must report the share value, even when you don't make profit, you don't make income, you don't make expenses, right? But in this video, we assume that there is income. So you come, you pick the income. Okay, me, I'm putting 2 million. Here, you click 2 million. So you scroll down to the profits. You see that you only have 2 million there because there's no expenses. All right. Well, let's cast as if we have cost of sales. So before you get to the expenses, admin expenses or other logistic expenses, you need to add the cost of sales, what it costs you to make this sales. Maybe the cost of sales is 1.5 million, right? You can see that you have a gross profit of 500,000. Remember, gross profit is not your real profit. Okay, before gross profit, after gross profit, you have salary. Maybe your salary is 100,000. Okay, then I'm reporting the 2 salary here. Maybe rents. Let's make this one rent. Then your rent is 200,000, right? Your advert is 50,000. So all your expenses, just cast them. If you don't have depreciation, you can leave it. Then admin expenses is 100,000. Okay, then 100,000, 100,000. Then audit fee is 50,000. Okay, let's say audit fee is 30,000. All right. So now you can see that you have 20,000 profits, right? Which is profit, retained profits. That's 20,000. You see, net profit or lost after tax provision for the year, 20,000. So that becomes your profit. Okay, the way this essay is designed, if it's lost, it will show you red. But since it's showing you a black color, that means that it's a profit. All right, let's check down to our cash flow. You see that 20,000 profit automatically is tracked in the cash flow. Then if you check the cash flow, you see that your cash flow is 1,020,000. That's your cash balance. All right, remember there's a share value of 1 million plus this profit that you have made now. So 1,020,000. So you check the balance sheets. You see the balance sheet, you have the cash, under the cash, 1,020,000. And you see the share, under the share, 1 million, retained profit, 20,000. So you see that the account balance, right? What you have here, and what you have down here and up here, the balance, right? So there's no issue. If you are at this level, if your transaction is to this level where you have income and expenses, you can go ahead and file. But if you have other transactions that need to come in, all right, because before you start filing, you start preparing this Excel template, you must collate all your sources of income, all your sources of expenses, all the asset you have. You must gather all of this evidence before you start preparing this Excel template. All right. So if at this level, this is what you have as your evidence of transaction, you can go ahead and transfer these information to the templates, the statement of account template, where you can use it for REV360 filing. But in this video, we have other transactions we want to add. The next transaction we want to add, assuming that you have a loan from director. All right. Now, you will go to the notes to the account. If the director brings his loan, personal loan or whatever, and you want to capture it, you go to the notes to the account. It's already part of the notes to the account. I told you where you have this yellow is where you type. So the next thing you go to, if the loan is 20 million, you write 20 million there, right? Write 20 million there. You see it? With 20 million now, you can drag this so that you have the figure clearly seen. So 20 million. So you go to the balance sheet. Remember, that is a balance sheet item. It's not a profit and loss item. So it has been captured under the loan, director's loan, 20 million. You can see your account also balance. Okay. This figure will also be captured on the cash flow as a loan here. Source is additional money that comes in. So your cash balance now has increased by 21,020,000, right? So you can see that it's balanced. So if this is the level of your transaction, you can also transfer this to the template, the statement of account template, where you can use it for filing. Okay, you can see that the account balances now with the loan, director's loan that has been introduced, right? So I told you, director's loan is not a profit and loss account item, it's a balance sheet item. All right, so your profit remain 20,000 that you still have. Okay, so let's add another transaction to it in case you also have more transactions. Assuming you have an asset, right? So you look at the asset schedule here, where we have the green color, that's where you type. So if you have an asset and the asset is 3 million, type 3 million. Right? So as you type 3 million, the depreciation is already calculated by itself. Okay, 300,000. What means that means it's 10% of the cost. Okay, so you have a balance of 2.7 million. Let's check the balance sheet. See, our accuracy now is balanced, is 0. Okay, see the balance sheet now. The balance sheet under the non-current asset, 2.7 million is captured as your assets. And you see, keep going down, removing 300,000 like that until 10 years when you have fully depreciated this asset. Then you see the depreciation now, first of all, is captured on the, okay, depreciation will be captured here. Come here and capture, okay, it's already captured. Look at the depreciation here. 300,000. It's already captured. So your loss now has increased by 280,000, right? But if you come back to the cash flow, you see that you still have 20,000 because the 300,000 is added back added back to the net profit to have these 20,000, which is the real cash in your hands. Okay, so you can see that as we added the asset now, the balance sheet changes and everything is still balanced. Then we can still add, assuming that you still have other transactions beyond this, right? Like you have accounts payable. Someone, you are owing a company. At the end of the year, you've not finished paying. So you go to account payable column under the notes. I told you where you have the yellow color, that's where you can type. So assuming you are owing somebody 2 million, you come and write 2 million. So once you write 2 million, you check the balance sheet. 2 million will be captured under the account payable. It shows that you are owing someone and your account still balance. All right. Under the cash flow, you can see the way it's presented. If you are owing someone 2 million, in the cash flow, you show positive because it means that you are owing someone and you didn't pay. So that money become an inflow for you, right? So if this is the only transaction you have, you can take this figure, transfer it to the template, the statement of account template, where you can convert it to PDF for filing. But if you still have account receivable, maybe someone is owing you money, right, at this time. So maybe someone is owing you money and is owing maybe 3 million, for example, or let's say 500,000, right? 500,000. You see the way it is. Your account also balance, all right? On the account receivable under the balance sheet, 500,000 is captured. Okay. Then if you go to the cash flow, you see that it's negative because someone is owing you money and he didn't pay you. It means that your cash flow has been depleted. So that's why it shows negative. All right. So at the end of the day, you see that your account balance with all these transactions. So once you are sure that the account balance and no issue, because once we have a figure here, it means that there is a discrepancy in your posting. So since we have 0 here, which is, I call it check accuracy, then it means that it's good to go. So we can move this to the template where we can use for filing. All right, so you can watch the previous video where we, the one that we did for new filing of this statement of account. You check the way it is converted to the statement of account. Okay, I think I can just go ahead. Once you get to this level, you go ahead and bring out the statement now. Bring out the statement and convert it, right? Convert it into the template. Let's see how we can convert it. Let's see how we can convert it. Okay, I have the templates already open. So now, assuming that we are filing for 2000, the year ended 2000, December 31st, December 2025, and we are supposed to file on or before June 2026. Okay, so what you just need to open these templates. Since you qualify as a small company to use this template, open the templates, download it from us, all right, so that you can save it and begin to use it for your company filing. So change the name, make sure that the date is appropriate, then change the ROC number, the tax ID, the registered address, all the directors of the company, list them, and make sure that you save it appropriately. Then you come here, turn over. You go to the Excel now. You are not typing it with your hand. Just go to the Excel and pick 2 million. Just go to the Excel and pick and come and paste it here. Just paste it. Don't type with your hand. Paste it, right? Then since you don't have any other income, that 2 million automatically become the total income. Then you go to the Excel again, pick the cost of sales. Pick the cost of sales. Then you come and add the 1.5 million. You put open bracket and close bracket sign. So once you do that, of course, you have 500,000 as your gross profits, right? Then you go to the salary, 100,000. Go to the salary, 100,000. You just go there and copy. Don't type, because in that type, you can make mistake. So the next one is rent. Just copy and paste. The advert is 50,000. Okay, I have to change that to adverts. Okay. Then other administrative expenses, 100,000. Come here and other admin expense. Then audit fee, 30,000. Audit fee. Right. And the next one is depreciation, 300,000. Look for depreciation here, 300,000. Then the next one is total expenses. Total expenses. Right? Then you go to the profits. Profit is a negative of 280. So this is what you just do. Just copy it. Since the Excel has been able to, when you put a negative, it's open and close brackets. You just make it. All right. So once you are done with that, we go to the balance sheet, cash flow now. Cash flow, of course, the 280 will come up. I already know that. Right? Then what will come up again? What is it? Okay, this is balance sheet. No, 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 no. Go to the balance sheet. The balance sheet is assets 2.7. Assets. So I'll move this. Assets here, 2.7. Remember, it's 3 million. Then you have 330,000, 300,000 as depreciation. So here will not be 2.7 million. So you can make this one negative. Okay, less is already there. Okay. Then once you are done with that, cash now, which is bank, 19 million. So you come and put it here. So this is what you do. You don't need to start cracking your brain again. Just copy account receivable. Look at account receivable there. Add it. So what is the total? This is the total current assets. Total current asset, non-current asset. Okay, you can just take, since I don't have, I just take as total assets. Total assets here. Write it there. So you can bold it. That shows. Now you go to the liability side. Go to the liability side. Go now. Liability side is 2 million for account payable. Typing it. Then no any other liabilities. So this one will now be 2 million. Then the shares part now is what? 1 million. You just go there and pick it. Then net profit now, the same profit. Hello? Okay, is that? Yes. Okay, 2025. Okay. 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 Okay, send it to. Okay, we just go to the retained profits, which is 280, negative 280. Negative 280. Remember, there's something we have not captured. The director's loan can form part of liability. And make it here. Director's loan. And make it part of, or you make it part of this liability here. Director's loan. 20 million. So if that's the case here will not be 22 million. All right. Then the total equity now here will not be 720. 720,000. The equity. So when you add the two together, remember you are just picking it from, when you add the two together, so you confirm this total with the one you have earlier to see that this one, which is equal. So once you are done with that, you come here and change the nature of the business to whatever the business is doing. Okay, then this basis of preparation can still stand for you. But what is there? Say the account we prepare from the books and records of the company, which is true. Then the revenue Here now, you check that revenue that was declared there, 2 million. Put it here. You have other revenue. You can list the revenue here on the note of the account. List the various source of revenue. There are only one single amount that will appear on the report. Under the cash and bank balance. So you look at the bank balance you have on the account, you can go up there. This 19,520,000. Come on. You are getting those money from different, that balance is the different source. You can list all the source of the banks where you have those balances. List them and have a single figure there. Right? So that's notes. Notes to the account supposed to give more explanations to the transactions on the balance sheet or profit and loss account. Then the same thing to the liabilities. Do the same thing to the liability. Go to the account, see the liability here, 2.22 million. We also come and list out those people that you are owing, right? Those people that you are owing, list them out and keep the balance in there. So that's what you also do. Then once you are done with the notes in the account, you come to the taxpayer attestation. Okay, this aspect is very important. It must be endorsed by a director, one of the owners of the company. So the director will come and fix their name here and change the company, right? Ensure that it is within this accounting year ends. Then the director will come and fix his name, then sign and put a seal, put a date. So once this is done, the next thing you need to do is to go to File and go to Exports. Then you click Export to PDF, convert it to PDF, then you publish. So once you publish, become a PDF document ready for REV360 filing. So once you have this PDF document, you save it appropriately. It's already saved, right? So just ensure that save in the right locations you have to. So once that is done, you are good to go. You are filing. If this video saved you hours of frustration, click the subscription button so that more business owners can discover it. Thank you for watching, and I will see you in the next video.